This is the market comment at xm.com for Tuesday, August 1st by Raf Boyajian. I'm Christina Marujos. The Japanese yen found itself in the familiar position of eyeing fresh lows against its major peers after the Bank of Japan unexpectedly intervened in the bond market on Monday to rein in the steep rise in local yields. The jump in the 10-year JGB yield came after the Bank of Japan's surprise move last Friday to adjust its yield curve control policy by widening the target band. However, the tweak appears to have caused some confusion in the markets, as it's unclear if policymakers are targeting specific levels or ranges within the target band around 0%. The Bank of Japan has quite a task ahead of it in communicating more clarity around this policy shift, and Governor Ueda will likely be put to the test in the coming weeks, as there is a risk the yen resumes its free fall in the absence of clearer guidance. The US dollar extended its advance against the yen on Tuesday, while the euro and pound also drifted lower versus the greenback. Whilst investors are more certain than ever that the Fed's tightening cycle has reached its end, there is growing confidence that the US economy will avoid a recession, and this is keeping the dollar supported. Across the Atlantic, the Eurozone economy grew more than expected in the second quarter, but underlying inflation did not decline as much as had been predicted in July. The data out on Monday should have been positive for the euro, but doubts remain about whether the European Central Bank will be able to hike rates again. The Australian dollar wiped out all of the prior day's 1% gain on Tuesday after the Reserve Bank of Australia left the cash rate unchanged at its policy decision. Although the RBA kept the door open to further tightening, the statement did not provide a very convincing argument of why additional rate increases might be needed. But monetary policy is not the only factor hammering the Aussie, as doubts about China's economic prospects have started to creep back in. The Cakes and Manufacturing PMI fell below 50 in July to a 6-month low, suggesting that the stimulus already announced by China may not be sufficient in reviving momentum in the world's second-largest economy, as the slowdown only seems to be deepening. This was the market comment. Thank you for watching at xm.com.